Hey everyone, good afternoon. I made that coffee and I choked so hard on it, so I don't know why. Like right when I started the stream. Okay, we can look at ES here in a second. Semis did have some relative strength today. I don't know if you guys were watching some of these, but a lot of them have had some really good odds of continuation. Is the stream working, guys? Because it just said that I went offline for some reason. So weird. Anyway, on MU, we mostly looked at the 11-month chart in the past, but this has kind of just been like a ongoing continuation type play. Especially when looking at like the overall range. Sometimes when you have like major breaks like this too, it's helpful to even just see like a general idea of like the exhaustion range versus like max range that the ticker has had in the past, just because it can kind of help you gauge like some, I would say, like calculated ranges. Like I noticed that this one moved close to like 145 and 155. In specific to like these kind of ranges here. Yeah, that's weird. I don't know. Kind of like within the range in here. I don't know where my MU template went. Kind of disappeared. I know these don't look entirely accurate, but once you kind of see it with the range that it's kind of moving in between, and especially if measured off like the actual highs, lows, open, close, like this area in here, okay, versus like this area here. Do you guys see it? So you can use these metrics on MU if you wanted to, especially with like this one trading in these newer ranges. This isn't exact. This is just to kind of give you guys an idea. Because the areas that have the most overhead is definitely close to where it hit in terms of like those. This is off the yearly open. Do you see that? Kind of like the clearance break here back in November. Sometimes it's a bit easier too when you like measure from the actual daily chart. So if that was the past range, maybe measuring off like the 2024 highs, for instance. Do you see this? Like off this area in here? That would have implied that there's a lot of overhead around here, hence this being like the 2025 highs. Does that make sense to you guys? Like sometimes using range theory honestly is so helpful. Yes. So strike command, then do this. Try measuring some of the ranges that MU is moving in between. It'll help give you like a really good idea of like the kind of structure breaks, oops, that you can get. Because if this were to come back and break now this range in here. And I would bet anything that it's likely trading within. I think this could be like the next interval here, but I was going to say that this is likely trading within this range in here. And you could also measure so what is that, 96.86? If you measured maybe from like the actual structure breaks that took place, so you know, maybe from here. Okay, do you see that? What is it, 96.86? Pretty close. So kind of like in this area in here. Off these structural lows. But there's a lot of overhead in this area here. And then that's where it could potentially be heading. Or you could even incorporate the wider ranges off of these areas here. That would probably take you close to like the 500 mark, 505, 506. Okay, maybe like that range in there. Let me just save this because I had previously been looking at AMD. Because AMD is coming back to the annual triggers close to like 234. I'd probably set some alerts on that too. Crude also had a pretty good day today too. We'll get to ES in just a second here. I kind of want to cover ES like the last 10-15 minutes of the close. Yeah, we can look at that one on Twitch. But this is flagging back up, so I would for sure set some alerts back on crude. And we still have the long holdings for XOM. I don't know if you guys are... Who's still holding XOM with me for the February and March calls? I said you could take XOM or XLE. XLE was the cheaper alternative. It wasn't as expensive as getting some calls in XOM. But I mean, XLE also had the literally like the exact same type of movement and is getting some really good structure breaks. What do you mean Tesla? We're talking about oil. Talking about our XOM swing. Especially on this structure break. This was a really clean break of that 152.91 area that we looked at last week. Kind of move this out of the way. And we said that this could be tracking to get back to, basically get back to 184 or get to 184 since it's moving in these 21-point intervals. So this break right here where it just cleared and this clearance right here is essentially implying that it's already moving on its way up to these next bars here. I don't have them marked. I just kind of left them off, but you can start adding them if you want on XOM. Pretty sure we said that the really calculated spots are close to like 164, 166. Kind of like this range in here. I didn't really fully mark them, but mainly off our like 148, 149 spots. I'll have to go back and mark these properly, but it was off that 14775, so close to like 169. These were the calculated spots on XOM. But the fact that it fully cleared these areas here, 14926 would be 174.7. So we're essentially targeting the 170 area. But I'm actually surprised that it fully cleared this range in here. Let me just make this, I don't want to delete it, but it's kind of hard to see with it on there. So if you want to take it off the actual spots that occurred, the thing is like these areas were so calculated. And where they closed this on Friday, that 149, 05, and then that opened at 149.26 on Monday. I didn't notice a single person talk about that. Do you know how extremely calculated that was that they opened there? That 149.26. This is literally the exact clearance break of these marks right here. Okay, so 149.26 weekly open is probably going to be the most aligned with this 170.47. So I would mark that on your charts with XOM, because these are going to be the much bigger overheads. I think the very final range that we looked at was, what is that, 151.40, 172.62, 62 was like right next to here. So 152.91, I think, or like close to here. What is that? So that would be like 174.13. If you guys want these areas, just tell me and I can send them afterwards. If you want to measure off where it actually cleared, then like in terms of today, because they had their ex-dividend day, hence this kind of price action, then we'd be looking closer to like that 174 area. But I was targeting close to 169, 172 on this one with the potential clearance break. So I think okay, that covers XOM. Someone was asking about APP because they report in the after hours. Okay, for starters, the yearly is on an inside range, so from open to close 342 points roughly. So the simplest way you could look at this is from like an open to close ratio. The first thing you would have to do is probably clear that exact sort of range for this to have any sort of like structural PA. So back in here, this was like 380, 286. So let's see, 286. 286 is close to like the 7. Oh wow, do you see that? 286.43 is 745.44. That's a calculated spot on this. You can mark that. And that's basically exactly where they hit. I don't know if you see that. Isn't that insane? That's the calculated highs, okay? So that's a calculated all-time high on that one. So I would say that you could probably use the same sort of range off lows maybe this year. So like 7,280. This area here, 64755. And if they had kind of like an implied range of like half that move, what's the implied move? 13%? Well, you could also just go like off the quarter. That could be like your implied move. Or you could go 286 by 13 points times 0.013. So, oh, we'll look at that in a sec. We'll just cover this and then we can look at that. That's one way to look at it, or you can look back at like these kind of ranges in here. I just feel like this is more of like an annual area that you could use or target with this, but especially off like where they're currently trading, or where did they open the year? 683.37. That's like off the high range. I want to see what kind of ranges these candles had. 71.37. How many points is it moving in today? So it probably has to break at least that 37 point ratio today off these structural lows. 121. Most of these are see, like this isn't bad on the 3-month because on the 3-month it's not stuck, so this could still break some range. So I wouldn't completely take away the fact that they could pull it back, I guess, on the upside. But same with the 4-month. Like these still have odds of continuing this 3-bar type pattern and taking out those highs, but it would have to be done before Q2 or like before mid Q2. And I think in order to do that, at the very least, it would need like some range breaks back over 582. So you could also take like the 286 by 2. That's close to like 143 points. That's probably going to be around like this 603, 617 range. Off lows, 143-ish points is like back to 5, close to here. That's half the range. It's mostly the 6-month ranges that could keep it stuck, but I feel like stuck within its parameters though. Like this definitely has odds of coming and like breaking back into like this range in here. I would maybe look at like the 502.97 and then closer to like that 552.53 area with like 610, 617 kind of being like a wider range. If they had a 13% implied move from here, that's pretty big, but like 459, that should be close to that 518 area. That would make sense because there's half that range and where it's currently trading, so like 286 by 2 is 143. You could take that off I guess today's lows. That can kind of give you like an approximate estimate. It should take it back to like these highs right here. But if you did it off the actual lows that occurred, 143 points is going to be like right around this bar right here, kind of where it got stuck last time. And I would imagine that that's a 13% move, because if it's trading at, let's say, 458 into the close, that makes sense, because 458 times, let's say, 1.13 would be like 517. That's the 13% move, which is basically half of that annual range off open close. And I think for that to be the case, you probably need to hit at least that makes sense that they're trading around 35.75 is like a fourth. Okay, 71.5. So you probably have to break at least 35.75 points on this session today for that to give you those odds. And that's probably where that's basically taking out yesterday's close. Close to like 473 or something like that. Like this area here. Okay, and then 71 would trigger taking out. 71 takes out like this structural high, basically, like that. So that would make sense, because that would be the actual spot is. Oops. Oh. So that's one way of looking at it. That's kind of like your areas that trigger like wider range upside, basically. Okay. Yes is basically stuck. I just wanted to cover like the last 10 minutes, but if you guys want to cover gold, that's fine too. No, I went March long, remember? On gold bill, especially off like those clearance holds. Like look at how the GC basically held our 4,000, 420, 426, 412 area. Like this range in here. Okay. Off GC. This is a huge area. I would have obviously preferred it held closer to like 4,568, but because that would have given us the better odds. But this is why we're stuck in this range. Do you see it? Here, Bill, I'll tag you in here. Use the exact ratios that I used. So on GC, we're using those 718 ratios, and it's quite literally exactly where we're stalling right now, which triggers our 5,120, 5,000. That's a huge area, right? So we already know that that's a big spot. These areas are quite calculated, but when I took that actual range and measured it off where they actually held, so like this area right here, 718 points off the actual lows is 5,141.2. Okay, so if you want to mark it down, it's going to be pretty close to our spots anyway, but if you want the exact area, like using that ratio, that's what it is. So we can mark it. Just I lost my other gold chart, remember? So unfortunately, I only have the GC one. The other one got wiped, which is very sad. So, but it should be quite similar, like these areas here. A lot of them are also on Twitter and in the Discord, so you can still go back and find them. But this break right here is what can trigger that retest, because essentially, if you look at it like this, if you measure off like the open close, do you see that? These open close ratios basically takes you back to here. Do you see it? Where they stalled. So that would at least give you an odd of retesting those opening ranges. This close right here gives you an odd of retesting that failed high. Our calculated spots close to like 4,939. These ones give you odds of getting back to these ranges in here. But you can't do that unless you basically clear this candle. Like this candle right here is exactly calculated. Like this close is calculated to this high. Does that make sense? That 4,907, whatever that spot is. So, but where they currently are right now, this kind of just puts you back at an odd of still eventually getting to our bigger price targets here, which would be these ranges in here. Still the same ranges, okay? It's the exact same thing. Maybe if I have it like this, it'll make more sense. Like this is the max downside. Okay, this can net you back that upside. And gold triggering huge areas here, okay? Let me post that actually to Twitter because I haven't posted an updated chart on there in a while. Gold re-triggering our 6,1245141 areas. So the gold template is the one that kept getting wiped. So, and I still haven't had time to go back and fix that. The silver is literally still nesting. This makes sense though too, Bale, because remember silver, this area here is, I still have it drawn. This green bar, these are the pinnable areas for silver, like around 79, 83, 84. It's the same thing. So when you see gold around 5,110, 5124, 51, then you would want silver to be around these areas too. Does that make sense? These are really calculated areas that can, honestly, buying silver here is probably not a bad call. I would check to see what their flow is looking like into maybe April. Just because, remember, silver also has the 11 month that continues, but on the shorter time frames, remember when we looked at silver, it was, what was it? Was it the, I don't remember if it was the 18 day. I think it's the 18 day. This flips over. This flipped on January 29th. Okay, that was our big flip date. Are you guys listening? And it reflips again on February 25th. Okay, this is our 1, 2, 3, 4. That was the exhaustion period. So this hit a major area of exhaustion on January 29th. That was our flip date, correct? Isn't that when it flipped over? Yes, it was. That's the exact flip. Look at that. And we looked at this how long ago? This was kind of when it hit highs. Look at when it stalled. And it hit exactly our 121 area. So, but it broke it. So that could still give you an odd of coming back and retracing around. But the time frame of that would be from, I would mark the 29th and the 30th. And then you can mark maybe like just a day before and a day after. Okay? February 24th, 25th. I would mark the period between the 24th and 26th. Okay? You can mark the mid-range. So mark what your median range would be. So if we're looking at this from here, your mid-range is going to be like your 9-bar period. So today would have the best odds of getting, you need a structural close back over these marks here. That makes total sense because these were the calculated areas that we needed back in here, remember? Okay, so this is probably the earliest 8 bars that they would start like coming back and testing these ranges in here. Okay, this is basically the mid frame right now that they're testing today and tomorrow. These are the mid frames. So this is 50% of the time interval, okay? I was using that on the what's it called, on the gold chart. GC, I use slightly different ranges, and that's the chart that got deleted. So, but 588 is still valid on the gold chart. I think all it really is though is like the 588 plus remember how we have like those smaller intervals like the 89 or whatever? It's pretty close to that, like 677. It's around 670 to 720 points. But this is what I used on GC. Okay, back to ES. I said earlier that this is probably going to end up being a pinnable afternoon. Okay. These were our weekly targets based on us retracting our 256 points in range, which they did. So we were looking at that 707 as a major overhead. So this area in here, okay, that was our first major overhead. Off an open close ratio, we had odds of getting some wider extension breaks closer to like 741, 742, which would basically take us back to highs. The way that I looked at this is the range breaks that we had total could be the max differential on the week. So like 260 points. So like there's a 4-point offset here, right? Between 256 and 260. Same with that 707 versus 711 area. And that makes sense, especially since our weekly supports for last week were 6752, 6758, and 6744. So looking back at this would make sense that they're doing kind of something similar here where there's that 7.5-point offset, okay? Or they're kind of clearing this range in here by like a few more points to hold it above basically the channel, like 6744, 6748, 49. I also figured that they could also recycle that range towards the upside if they wanted to. So there could be some odds that that puts you at a probability of like 70-23, okay, or 70-38. Since we have CPI on Friday, this is probably important to start noting these things now. Okay, and a lot of this is going to be relative to where they take us into the close today. So today's closing points made total sense, and I had mentioned them earlier. Since they broke us up by 4 points, that can protect us by 4 points. What I meant by that is I would have preferred that they held closer to like 3.3, 3.4, and that 3.5 area, 3.575, I think was where they opened the session on Monday's real-time session. And one way of looking at that, especially if you're like measuring that 707.50, okay, and then where they actually stalled highs is it's the same differential. So kind of like the 4 points that they broke above here, okay, is the same idea on the break below down here. Does that make sense? Because we would have preferred to have held maybe closer to like 3.4, 3.5, whatever. Okay. So kind of just offset that. I do think that on Monday's session, we already know that we still have some risk beneath. What's our max risk for the week? For those that listen. Where do we still have odds to go down to if they wanted to? And the market's doing this intentionally because they know that there's still risk on the downside and they know that there's still some reward left on the upside. We still have odds to get down to like 69.17, 69.16, max 69.14, correct? Do you see that? This is the same sort of offset. They broke it 4 points above, they breached 4 points below, they saved 4 points above 14, 16. Okay, it's kind of just leaving us in that realm of essentially just being pinnable. And what they're basically doing here is they're making it, yesterday I said, if the structures to break, and I have notes on this, was they have to get this over 8285, okay, for some really good structure breaks. And the structure breaks below would have to be beneath 6.6 and 6.4. If you paid attention to where they brought this to yesterday, this made total sense because what they basically did yesterday's session is they just brought it back right to the median point. So yesterday they kind of stalled. Where's yesterday? Right in here. Yesterday they kind of stalled 707 and then they kind of brought it back beneath 9.8. Then back in here in the afternoon, remember before I signed off, I said they're not going to get any breaks unless one end here breaks. Okay, they either have to break 8.2 or they have to break like 8.285 or they have to break 6.664. Correct? If neither end breaks, they're basically going to make it so that this stays pinnable. Okay? So, and that's exactly what they did. We would have had better odds if they closed closer to 7.3. Okay, these are the structure breaks. That's why a break of 8.2, 8.5 would have been a little bit better. Notice where they ended up pinning the close. Do you see the pin into the close? They brought it right back to the 70, 71 area. Okay, so that's not a bad close. It was okay, at least to give you an odd of coming back and retesting 8.5, but you can kind of see here, this little breach below, again, it kind of just resets those exact same conditions. And now they're struggling to get those structure breaks over 6.9, but they're still sustaining 5.3. Okay, same sort of idea. You need those structure breaks now to get back to highs. You need to break back over 8.2. It's the same sort of thing as yesterday. And now it's kind of giving you some odds of kind of staying stuck in between. That's why I would say like the minimum condition at this point to have avoided retesting lows is we need to get back over 6.971. What's 6.971? Yesterday's close basically, right? Correct? I'm staying a bit after the bell, guys, to kind of guide you guys through ES. So do we have risk of retesting 6.931 if we don't close above 7.1 today? Yes. Do we have risk of retesting 69.21, which is basically our weekly lows, if they don't bring this back over 6.966? Yes. Okay. Where do you think today's close is pinned around? Think about it. 69.16.5, 69.14 is extremely calculated for risk on the week, which is linked to 6.964. Where do they end up closing this? Let's go back to a 1 minute. 59, 69.58.75. It stalled 6963 right into the close. Does that put us at a risk of our max downside? This is insane. You guys have to try paying attention here. We already analyzed this earlier in the week that the 14 area was essentially a potential risk for us on the week. Okay? Do you see where they stalled right into the close here? Does that put us at a risk of 6914 if we close beneath 63? Like basically beneath 63, 6350, which is right where they stalled at 359. Off our 707, which is our calculated area. Okay. And this range in here, it's closer to that 6960.75. What's 6960.75? And this is pretty insane because this is measured off our 256 points in range. That's what I'm using this area for. What is this measured off of? What is 6960.75? What is that linked to? How did we determine 6914 was our weekly risk? Obviously based on where we opened, right? Where did we open the week? 6960.25. Do you see the correlation here? So them taking it back to these ranges, it basically just like confirms that there's still some risk that they could take it to 6914 on the week. And look at where they held. 6952, 6955. See how they kept us between 69.55? But they also couldn't get us back above 69.82. This afternoon, or 6988. Look at these stalls. Especially on like a 1 minute chart. So, does risk to reward make sense from this view here on Wednesday? Okay, the 69.52 to 69.55, 69.88, this area here is extremely pinnable. Being closer to 60, 55, 58 gives you odds of this area here. Being closer to 71, 74, you can still backtest the channel, but it gives you higher odds of at least getting back over 88 and retesting 70.07. Does that make sense to you guys? So where Would you want to pin the session today to completely avoid going down here and wanting to sustain? And at the very least, retesting 70.07. This would be on a hold over 6933. Odds to retest 70.07. You'd need at least 6970.25, which is literally yesterday's close. Okay, so this at least helps you avoid that. Do you see how today we had odds of back testing this area here? It makes sense because 707 was calculated. They closed at 6970, which is linked to 6932. Okay, those areas are linked to 6932. Whereas maybe getting back over 7012, you'd have to get over 72. You'd still be at some risk here. The best way to avoid all of this potential volatility, you need to get back at least, like if you want to avoid the channel entirely, do you see how, if you want to avoid the channel, which is basically above 6950, do you see how you need to get above 6981? To avoid the channel entirely, aka over 6948, 6950, do you see how you have to get back over 6981? And it's quite clear. Look at this box. Like, look at where they kept us stuck. Do you see it? Okay. The best area to sustain is obviously going to be above 5255. Okay, 55 would be even better, but that's how you need structure breaks over 8388. Does that make sense? And this isn't even to give us an odd of getting to 7022 or 27. This is just to retest 7011, 7012. Okay? These sorts of odds, 7022, a core range, you need at least over 6988, and you have to hold 6955. Okay, in order to get back to 6988, aka the zone, you need to sustain 6955. Okay, and this gives you an odd to test 7022. So it's very common sense that your 6966 holds, or 64 holds. Okay. Same idea. To get a retest there, you need to get back over the zone, 6988. So 64 is linked to retesting here. Okay. 6988. But you can see like the odds around 69, 98, 97. Okay, kind of like the 7K marks where they stalled if you hold 6667. To get a retest of all-time highs. Do you see how you absolutely have to hold over 67, 68 and basically get that structure break over 7005, 7006? That puts a lot of pressure. Okay, so based on where they're currently trading right now and how this is reacting, I'm not saying that it's not possible that they can't get a 7007, basically last week's retest, but in order to do that, there's going to be a lot of pressure for them to hold the means, basically 6952, and to get back into the zone above 698889. Okay, and that's why I was saying 6989 is calculated. And there's no way they can do that unless they manage to get some structural breaks back in here. If they want to really limit the week, okay, which they could if they want to do that tomorrow, let's say they keep it somewhere in between here and limit us to the zone. Okay, but also don't break us back down to the channel, like, or don't break the channel. You would basically just stay where you are. This keeps you stuck between 6934 and 6988, staying where we are, which is why maybe getting a bit of a progressive close, even if it's above 66, can at least give us odds of holding 4-4. Does that make sense? And that could maybe keep that range for Friday's session, and that could be our offset to get us like the 70, 22, 24 resets. Okay, if they maybe hold the zone or the channel, maybe you get 17 points here, differential. Okay, that 17 points, maybe that gives you an odd of breaking that 17 points above. It would make it kind of tight, but at least it would give you an odd of 70, 28, 29. Do you see what I'm saying? But that would make it for some very tight trading, because you're trying your best to protect 6948, 4950, so on and so forth, which keeps you right between but you do have to close above 696668 for that to even be a probability. Okay, and then your first condition overnight would be you have to get back into the zone, or at the very least retest 88. And that's what would make it that very tight range bound kind of range. And then otherwise, then you're back at risk of, 17 points below, which I bet money this is right at 69.14. Yeah, it is. Does that make sense? So long story short, market basically has 17 points left of like range, I think, if they close around here on each end. Okay, 17 points in sustainment could give you 17 points above. 17 points failure to sustain could break you 17 points below, which is our 69.14. 17 points sustainment and retracement. Okay, by and retracement, I'm talking about this. So this, do you see that? Back over our 8.5 gives you odds of getting 17 point break above, which is our 70.27, 70.29 retest. Hopefully that makes sense. I'm going to wrap this up. I feel like anything above 6.6, 6.7, 6.8, it basically still resets our weekly conditions, although it looks pretty scary like this. I feel like this is still a decent odd that they can, if they sustain this area here and they neutralize this area in here. By neutralize, I mean not necessarily sustain it, but like close around this area here. Okay, you'll have some odds of getting the structure breaks of this area here. Okay, which will give you odds of getting back to your structure breaks in here. Okay, at the very least. And if they decide to limit range to 70.16, which we talked about as being a probability, that's just like the 4-point break above. That's another case that they could do, right? If they end up sustaining this area here and this becomes the max downside, then this is how you can kind of recycle the range up. But that would mean a good close, a good structure break. Okay, and this would be like the expansion if they wanted to do something like that. Does this help you guys have a better idea of what you can expect on the week? The simplest way to look at this is basically market makers working with our 128 to 128 to 132 points and keeping it in between. So okay? Off highs. And they're basically just keeping it right in between. If you measure off prior week, it's not as much. It's like core ratio is like 107 points, which can limit you close to like 53, 55 points. And so you can think of it as like being half the range. 53 points is probably like right in here. See what I mean? Here. That's why they keep pinning open, close. Okay, highs, lows. Open, close, highs, lows. Like it's like they know that these are calculated areas. And it's actually closer to like 53 points, which is probably more accurate. And if they had a wider risk of downside, that's why closing around here can keep that risk on of 69.06. Okay, 69.17. Do you see it? These are linked with these areas here. So ideally getting it back around this range in here would be best for odds. And if they really wanted to extend both sides, like 122 points total, that's that 61 point ratio, which basically means getting it back over these areas in here. It's that 8-2 spot. Okay? That 8-2 area is really calculated to highs in this range. And you can kind of see if you move this down, how this is linked closer to like 69.10. That's why we want to ideally avoid that. But in order to do so, they need to get it back into the zone, like 69.89, 69.90. And that means holding 69.50. Okay, that's linked to 70.11. That's what can get you back to that 70, 21, 22. And that makes sense because they opened 6 points beneath our 6-7, 6-8 spot, which is how you could have a 6-point reduction beneath based on where they started the week. Because we prefer that they had opened closer to 6, 6, 6, 7. It's the same thing. So we're kind of still in the mix of being sideways and in between. Any questions, guys, before I end the stream? Or are you guys good to go on your end? This APP is kind of moving within those same ranges that we just looked at. We said that maybe like an implied move of like that basically has to get back. Above that range in there to get any sort of traction. gold is kind of like right beneath that 51.20, so I think we should make sure we're watching this. I feel like silver was a little bit stronger, to be honest, and it's right in that box that we talked about. And then CL kind of just nested, but okay. Okay, I'll catch up with you guys later. Bale, if you were listening on the mic and if Scriptly somehow sends anything, like in terms of like, I don't know if I had to have joined. I keep forgetting. Next time, remind me to join my live so that it takes notes, okay? Because then that way it'll send me a script of the session, and maybe that's easier to word it, especially since I take pictures of everything so that there's charts to go with whatever I discussed on this session. But I don't know if it's going to send you anything or send me something if you were on it. You were on it by accident, but I don't know if that'll still record. Like if it was listening to anything, I don't think so, because it was on Twitch. But next time I'll have to remember to do that. It's okay, I can summarize this after, but next time I'll have to just remember to do that. Well, I have like a private voice channel in here that is like literally just for me. I can just join that and then it can send it to me on there. And then that way, it's just an easier way of summarizing these streams than having to like rewatch. But I'll have a report out tonight, but that also kind of streamlines things a little bit for me too, because a lot of the streams is also repetitive on what's going to go on the report too, right? Because it's essentially the same thing. It's just reiterating it again. So